As stated in one of my previous videos, I said that student loan defaults will impact our society in many ways. And one of the largest, biggest ways that it will actually do so is with mortgages. Being an individual that have a student loan default, one thing it's going to affect is your credit score. Now, this could affect your credit score easily 100 points. Credit score being below or whatever case may be or lower will be a high risk to lenders. Not only it'll be a high risk to lenders, it'll also eliminate you for different programs with different programs that are available. You have the conventional loans, which is an option. Typically conventional loans, you're putting 25 to 20% down. And then also you have government-backed loans, which are your FHA loans, things of that nature, which you may not have to put as much down, but the government-backed, if your federal loan happens to be government-backed, that's probably not going to look good for you as well. And then manual underwriting, if you're high risk, you're trying to go through the manual underwrite, this could cause problems and make it very challenging for you as well to get loans going forward if you're in default with student loans. So this is number one, credit score. Two, the other element is debt to income ratio. Now, you have an income. Let's just say your income is $10,000 or whatever the case would be per month. And let's just say all of your debts or whatever for the particular month is around 70%. Your DTI typically need to be around 40%, where your mortgage plus your monthly expenses is around 40%. Sometimes with your credit score being higher, they'll bump it up to 50%. But this can be a major issue if you have student loans, you have a mortgage, you have a car note, and you have other credit card bills or whatever. If it puts you over that threshold, now it messes with your DTI, but on top of that, now you're getting garnished. So what if that garnishment is an extra 15%? Now it's limiting the amount of DTI that you have available, or your ratio is making it higher than making it lower. This can eliminate you as well. So we talked about credit score and we talked about DTI, debt to income ratio. The other aspect is now if you are in default with your student loans, it will probably be even longer before you become a homeowner. This affects you short term and then affects you long term. So now it's taking you that much longer to become a homeowner because you're fixing and working on your credit. You're trying to get those things taken care of, trying to get your payment history together. And so now when there is a good opportunity that goes out on the market, or when the interest rates are lower in the market or whatever the case may be, now you're not even in the game because you was a default with student loans. And again, this impacts individuals and families that want to purchase a home. This is a major issue. Now, on the other spot, you're getting taxes. Everybody pays taxes. We have a tax year coming up. And instead of you having a tax asset, which means you get money for the tax year, instead you might have a tax liability because now that you're in default, there's an offset where those tax assets, the money that you maybe received from taxes, are now being taken to pay for those garnished wages. This is an issue as well. So I wanted to come here today to talk about all of the different ways of how being in default on student loans can affect you dramatically. It can affect, even your offspring, like it's generational wealth as well. How this changes the whole landscape of mortgages. But here's the bright side. I not only come here with problems that we might have, but I come with solutions. You can have an option of consolidating these loans to get things in a better situation, which is probably an option. So consolidation is an option. Income-driven plans is also an option as well. There are several Americans right now that are waiting on answers for income-driven options. I know that there's a big weight on that. There's individuals waiting on that. The Trump administration did get rid of around 50% of the staff that was there with the Department of Education. That is an element as well. But don't give up. Press forward. Try to be productive at the same time. Try to look at your different options for getting out of this. This will be a play a major impact on our society going forward. If you're not buying homes, there's appliances not being purchased. There are taxes not being paid. There are HOA fees that are not being paid. There are plumbers and electricians that are not being paid. There is Home Depot, your corner store, your Home Depots and your Lowe's are not getting people coming there purchasing items. This is a major impact with a major industry, a big industry. This is Terrence Russell here. Go ahead first. Give me some thoughts. Give me some feedback. Again, I stated more than one time, the student loans was an issue. We have individuals that went to college or went and got a career, and it's not working out for them right now. And then of course you have the debt on top of that. This is not good, but we're gonna have to try to press through this and see how this works out going forward. This is Terrence Russell here. Go ahead first. Give me some thoughts. Give me some feedback. I look forward to hearing from you all soon. Please like, subscribe, and share if all possible. I thank you again. You all have a blessed night, blessed day, and blessed evening. Thanks.